Okay, what is going on, CYPRX Advanced YouTubers? Welcome back to another CYPRX YouTube video breakdown. As always, if you're interested in learning about cryptocurrencies, commodities, indices, foreign exchange, please go ahead and consider subscribing to the YouTube channel. We're going to do some chart markups today, go over some technical analysis on XRP. I'm going to show you guys how banks piggyback off of previous banks, off of premium and discounted positions. I'm going to go over as above, so below, that price must go higher in order to go lower, understanding those concepts, identifying retail traps, trading against the retail herd. And we're going to also cover news manipulation, FOMC, timeframes, and ways how not to trade during those specific times. So as always, make sure that you guys are subscribed to the YouTube channel. Really do appreciate the love and the support. Comment down below if videos like this and others have helped you all out in the market. Trying to give you guys clear-cut clarity. Anybody that's interested in the mentorship surrounding my technical analysis strategy, that link is in the description down below. You guys can always reach out to me via email and schedule a Zoom call if you have any questions. Without further ado, let's get started in today's video breakdown. So we're going to start by turning on our session indicator so that way we can have a clear identification on what banking institutions we're doing during each and every single session: Asia, London, and New York. And I want to show you guys how yesterday's FOMC meeting took place, and it was a manipulation move to add to the liquidity in the form of buy traps to grab liquidity from the upside before the banking institutions sold off. In order for the market to sell off, we're going to go over first how banking institutions like to sell from the most premium ranges, and they will give themselves the most premium ranges by manipulating buyers and creating liquidity to the downside in order to boost price back up, grab that liquidity, and then send price lower. So we're going to go over that real fast first. All right. So I want you guys to pay attention to where the sell-off took place. It took place during the daily candlestick open right here at Asia session. We know that the daily candlestick opens right here in this general vicinity. Okay. A couple of hours before New York session actually hands over price to Asia session. That is where we get that daily candlestick open. And if we look over to the left-hand side, previous to the couple of sessions before this one, the banking institutions during Asia also took sell positions from these areas, quote unquote, banking institutions piggybacking off of each other. So if we're doing some advanced tracking and we're highlighting the areas where banking institutions felt premium price was necessary beforehand, we can go ahead and mark those areas off, extending those areas over to the left-hand side, and we can confirm that Asia banks and institutions, London banking institutions, were selling from where they sold from the previous days in the form of the most premium ranges. Okay, we were operating at a low down here in this region where we can see that banking institutions started manipulating price. What were they doing and what were they creating in these areas? Trendline liquidity. They know that the retail herd, or the vast majority of individuals, chase bullish candlesticks and chase trendline liquidity, meaning that when they see imaginary trend lines forming, banking institutions know that the majority of retail investors are buying at these lows or buying at these quote unquote dips. Okay, right? So we have a whole area of liquidity in the form of leveraged account positions that exist down here in this range. We also have people that are willing to chase a bearish market if price sells off beneath these ranges in the form of sell stops. So we have a massive area of liquidity beneath these lows, right? Where we can see the banking institutions yesterday utilized the news catalyst surrounding FOMC meetings to pump the market into premium prices for them, and then they took sell positions. Going over piggybacking and as above, so below, we know that in order for the market to go lower, it must do what first? It must go higher, grabbing liquidity, then break previous market structure, creating new market structure, swing lows, and then create lower highs in comparison to the previous one, and then sell off. But until this pattern takes place, mark my words, you can go back test this. Every single time the market sells off, it does this pattern right here, where we see the market grab liquidity from highs, break previous market structure lows, shift market structure, bearish order flow taking over, and then create lower lows, lower highs. Every single time the market sells off, this is what happens. So we can see here, now zooming into this area, we've identified a 15-minute and hourly range, an area of premium price that the previous banking institutions from, you guys can see at the top middle of my screen, Asia, London, New York took sells. Asia, London, and New York took sells. We were operating over here in this general vicinity at a low or discounted price. So what did the banking institutions do? They manipulated buy traps in order to create liquidity, to push price up into their general vicinity. And we're going to get into this area right here to then give themselves premium and then to take sell positions. Bank and institutional traders, whales, things of that nature, they're not dumb, right? They're not going to sell price when price is not at a premium. They constantly give themselves premium price by manipulating price to give themselves a better position. So now we're going to go into this trading day, which was yesterday's trading day, and then we're going to talk about specific times in the market. So we're going to go to the 15-minute chart and we're going to talk about this session here. Down at the bottom of my screen, you guys can see I'm going to mark off for you 11:30 a.m. Pacific Standard Time, which just so happened to be when the FOMC meeting took place and started. Okay, so you guys can see how many individuals would have been chasing bullish candlesticks. Even yesterday, I was in a buy position on Bitcoin based off of a liquidity grab to the downside and a move in a higher low after price broke structure and created that same exact pattern. You guys look, here's the pattern right here. Before the market goes higher, it does what? It grabs liquidity beneath the low, breaks previous market structure with a new high, right? Breaks this market structure, creates a new market structure higher low, and then goes higher. Look at when I invert my charts, as above, so below. It's the same thing. If the market is going to go lower, it must first go higher. It must grab liquidity from previous highs, break previous market structure, create a new lower high in comparison to the previous one, and only then, and when it does this, will it go lower. Okay, so that's what I'm attempting to try and get you guys to see is pattern recognition. But we can see here that 11:30 a.m. Pacific Standard Time is when the FOMC meeting came out. We know that the market makers are in cahoots with the news outlets and they manipulate price. You can now see that this was the third touch of the overall trend line liquidity that was being built beneath these lows. So we have leveraged positions all beneath these levels. We have the FOMC meeting come out at specific times. Look at the manipulation. As soon as that came out, they boosted price up into their premium range that we have highlighted from where banking institutions sold from the previous sessions here, and we can see exactly what they were doing. They were manipulating price to give themselves the most premium range to sell from, and then they sold off, coming and attacking all the liquidity beneath these lows. Everybody is losing their minds right now in the market. Everybody is super duper confused, but if you just zoom out and you really understand what the market makers are up to on a day-to-day basis, and that is giving themselves the most discounted and premium ranges by manipulating price, you can trade in tandem with the banking institutions. The strategy that we teach here at CYPRX is not based off support resistance, supply demand, order blocks, Wyckovian theory, none of that stuff. It's about logic in the market, what the banking institutions are up to, how they strategically trade and manipulate price from psychological level to psychological level. And if you want to learn that strategy, you guys, and really take your career in trading to the next level, again, that link is in the description down below. Time and time again, I've shown you guys how trading with the retail herd, doing what the majority of people are doing, is going to get you annihilated in this market. If you really want to learn how to read these charts properly, take it upon yourself and invest in your education. As always, blessings to you guys. I appreciate the love and the support. Now let's go over some bearish targets on XRP. I want to take you guys to the daily time frame real fast. Okay, so looking at the daily chart right now, as of right now, what it is that I see in the market happening. Now, that's not to say that the market could give another bullish pump or reversal, but I've been telling you guys for quite some time. Let's actually go to the weekly. Maybe it'll be a little bit clearer. I've been telling you guys for quite some time on this YouTube page that most likely we are going to see XRP dump and other crypto and altcoins dump one last time before we do see a new alt season or a new bullish rally. Mainly because on multiple altcoins across the board, as well as Bitcoin, which dominates the market currently, we are creating nasty trendline liquidity. The majority of cryptocurrencies look like this right now. It's not just XRP, right? If BTC dominates the market, you can go to a BTC chart and it looks almost identical to this XRP chart, right? Where we can see trend line liquidity being formed. So the market makers are in a great position right now at these lows, instead of boosting price to the upside, to make that pattern, which is what? The market must go lower in order to go higher. Okay, that is the ideology behind XRP, Bitcoin, and across the cryptocurrency market right now, is that as above, so below, we must shoot lower to grab liquidity to build that momentum that we are going to need to have a new alt season. Okay, so in my personal opinion, I'm being pessimistic, and this is what I'm looking for. I've shared bearish targets to the CYPRX students and where I'm going to be looking for buy limits and buy positions to scale in on the way down, because overall discounted price is not guaranteed. What we are guaranteed in this market is what current price action information is telling us. Lower price action is not guaranteed. So don't sit there and wait, again, not financial advice, until 2019 cents comes around, because we may never get that, right? but learn how to properly dollar cost average in on the way down. I told you guys I don't buy XRP unless it is below 70 cents. So now I am in buy mode. I'm looking for lower price levels. The lowest that I think XRP price could go is right here beneath these lows, and that hovers at around 19 to 18 cents. So let's just see overall if we get this bearish price action on XRP. And just to show you guys what I'm talking about, I want to head over to Bitcoin and just to show you guys that the charts almost look identical. Okay, so this is Bitcoin, and I posted this on my Twitter. Same setup as XRP. We see this trend line liquidity. We see all of the gaps and imbalances in these candlesticks right here. And this happens to be at around 25 to 20 to maybe even $19,000 per Bitcoin. So in my personal opinion, same ideology. Even if the market did have a nice little pump, I'm still expecting this area to come and get tapped in and liquidated. Now that does not mean that I'm bearish overall. Temporarily, yes, I'm bearish, but that is healthy for the market to do. It's healthy for the market to grab liquidity beneath lows in order to firmly position itself in the form of momentum and volume to take positions back to the upside. All right. So again, this is my overall perspective, just something like this, right? This is just a general outlook. It's not accurate. However, I do think that the market, no matter what pattern it does make, does need to come back into these lows here before it does shoot higher. Now, if this does happen, I'm going to flip and reverse my bias so bullish it's not even funny, because if we do come and attack the liquidity beneath these lows, we are going to grab enough liquidity and momentum to send price to new all-time highs on Bitcoin. And of course, obviously, if the money flows into Bitcoin, it's going to flow into altcoins once people take profit from Bitcoin, and it's just going to create a massive rally. So again, make sure that you guys are paying attention. Don't sit on your hands and do nothing. Learn how to properly dollar cost average into these low price levels as of right now. Not financial advice. That's what I'm doing. Blessings to you guys all. I hope that you guys enjoyed this video breakdown. As always, be cognizant, be aware, and I'll see you guys in the next video breakdown.